Hey everyone, welcome back to 4 Credit Guys. Today we're diving into the fascinating world of securitization. Whether you're preparing for interviews or just looking to boost your financial knowledge, this video is for you. We'll be covering the first 5 questions from our Top 20 Securitization Interview Questions series. Let's get started. Question 1. What is securitization and how does it work? Alright, let's break this down in simple terms. Securitization is like taking a bunch of IOUs and turning them into a tradable asset. Here's how it works. A company, let's call them the originator, has a bunch of loans or other receivables. They bundle these together and sell them to a special company, called a Special Purpose Vehicle or SPV. The SPV then issues securities based on these assets and sells them to investors. So why do this? Well, it helps the originator get cash up front and transfer some risk. For investors, it creates new investment opportunities. It's a win-win. Question 2. What are the key components of a securitization structure? Now let's look at the building blocks of securitization. There are 5 main components. The originator. This is the company that originally owned the assets. The Special Purpose Vehicle, SPV. This is the entity that buys the assets and issues securities. The servicer. They collect payments from the original borrowers. The trustee. They oversee the process and ensure everyone plays by the rules. The investors. These are the folks who buy the securities. Think of it like a well-oiled machine, with each part playing a crucial role in the process. Question 3. What is a true sale, and why is it important in securitization? Okay, time for some legal talk, but don't worry, we'll keep it simple. A true sale is when the originator completely transfers ownership of the assets to the SPV. It's not just lending or temporarily transferring, it's a full-on sale. Why is this important? 2 big reasons. It protects the SPV and therefore the investors if the originator goes bankrupt. It allows the originator to remove the assets from its balance sheet. Without a true sale, the whole securitization structure could fall apart. It's like building a house. You need a solid foundation. Question 4. Explain the concept of bankruptcy remoteness in securitization. Bankruptcy remoteness sounds complex, but it's actually a straightforward idea. It means setting up the SPV so that it's extremely unlikely to go bankrupt, even if the originator does. How do they do this? A few ways. The SPV is a separate legal entity from the originator. It has limited purposes, basically just to hold the assets and issue securities. It has independent directors. There are restrictions on its ability to take on debt or merge with other companies. Think of it like putting a fortress around the assets to protect them from the originator's financial troubles. Question 5. What are the differences between pass-through and pay-through structures? Last but not least, let's talk about 2 types of securitization structures: pass-through and pay-through. Pass-through structures are like a direct pipeline. Payments from the underlying assets go straight to investors. All investors receive a proportional share of the payments. These are simpler and more common for things like mortgage-backed securities. Pay-through structures are more like a customized payment system. Payments are reorganized before going to investors. Different classes of investors, called tranches, receive different priorities of payment. These allow for more complex and tailored securities. Think of pass-through like splitting a pizza equally, while pay-through is more like a buffet where some people get to go first. And there you have it, folks. We've covered the first 5 questions in our Top 20 Securitization Interview Questions series. I hope this has helped demystify some of the key concepts in securitization. Remember, understanding these basics is crucial whether you're heading into finance interviews or just want to grasp how modern financial markets work. If you found this video helpful, don't forget to like, comment, and subscribe to 4 Credit Guys. We've got plenty more financial wisdom coming your way, including part 2 of this series. Hit that notification bell so you don't miss out. Got questions? Drop them in the comments below. And if you want to see us cover any specific topics in future videos, let us know. We're here to help you navigate the complex world of finance. Until next time, this is 4 Credit Guys signing off.